Sometimes forex trading is a wild and woolly place to be. That's why Hugh's here, to pose your questions to Walter, the naked forex guy. Hugh's got questions and Walter's got the answers. Here at the Truth About FX podcast.
Hey Walter, somebody wrote in and they said they have trouble sticking to and believing in a system. They say, I tend to drop a system as soon as they start showing less than stellar results and start looking for the next holy grail. What should they do?
Yeah, that's a tough one, isn't it? Okay, so obviously I've been there. I don't know if you've been there, Hugh, but I've certainly been in. Yeah, I mean, it's a pretty common thing for traders.
Oh yeah, totally.
There's a couple of things I think that can help. Okay, the reason I say that is because I'm unclear what the issue is with this trader. It could be that the risk parameters, so once you find a system and you run through it work out forex tester and you get your numbers meaning your average winner, average loser, and the win rate, you can work out what kind of a likely drawdown you're likely to have. And so that it could be that because this trader is risking so much that he or she is up against these major drawdowns that are inevitable because of the math behind the system, and yet they're so discouraging that the trader just says, I quit, let me find something better, this stinks. It could be that. It could also be, so the moral of the story there is, do your numbers, do your back testing, get your average win rate, your average winner size, your average loser size, and then your win rate. Plug that into fxjake.com/risk. And then the risk calculator, and you say, look, I don't want to have an X drawdown. So let's say you say, I don't want to have a 20% drawdown. You plug your numbers in, and you can find out how much you should risk so that you avoid that 20% drawdown. So long as your average winner and your average loser size stays the same, which is basically another way of saying your reward to risk ratio, as long as that stays the same and your win rate stays the same or close to what you were looking at with your backtesting, then you shouldn't really hit that. It'd be highly unlikely that you would hit that drawdown level. So that's one thing to do. But beyond that, one thing that I've learned over time is it's okay to have more than one system. It's okay to have a breakout system and a trend following system. It's okay to have, a really quick take profit on a retracement system, counter trend, and also have a trend following system. Like all of those systems are okay. So just because it doesn't work for some while doesn't mean that you should necessarily scrap it. If you've got your risk nailed down and you know what you're doing on that side of it, which is uncommon. Most traders don't have that nailed down. But once you do, what you can do is you can actually look at it from a broader point of view and say, look, this system is not working now and it's in a drawdown because the market's not trending. Okay, so what's another system that I could use that's complementary to that? In other words, what you're trying to do is build a suite of systems that when it's trending, one does really well, the other one doesn't do so well. When the market's quiet, one does really well, but another one doesn't. So it's okay to have a system that has a drawdown. Everybody has a drawdown. Everyone has to pull out of a drawdown. That's kind of one of the hallmarks of being a really good trader, is being able to do that and having your confidence while you're pulling out of a drawdown. So I would also encourage this trader to possibly look at multiple systems. So once you get your risk nailed down, it's okay to have 3 or 4 systems, knowing that maybe only one of them is going to be really hitting its stride at any given point. So that's another thing to think about there, is that you might want to look at it from a multiple system point of view instead of just saying, oh, well, this system doesn't work anymore because it's in a drawdown. It could just be that the market is not in the perfect mood for that system, and that there's another system that actually would love the market mood at this stage. So that's kind of how I would approach it.
I see. So I think another thing here also is they're looking for stellar results. So maybe you could talk a little bit about expectations of a system. What should somebody expect out of a system?
Yeah, that's so good, man. That you really nailed it. Because see, here's the thing: we look for that perfect system that's just going to make money all the time. I don't want to say it doesn't exist, but like for example, even a scalping system that's taking 1 pip, you could argue that, well, that system's always going to make money. There's always 1 pip to be had, Well, actually, maybe not. Maybe the market starts trending and the scalping system starts trying to take, counter trend trades and keeps getting blasted and getting stopped out. So the important thing that I think you want to think about here when you're talking about trading systems is, like, if I know that I'm trading a trend system and I look back and I say, well, about 30% of the time I notice the markets are in a strong trend, then I would expect that about 70% of the time my trading system is either not going to be trading or taking really poor trades. So that's like, look at it. The other thing is, let's say you have a breakout system. So your perfect market is when the market gets really quiet and then all of a sudden, boom, it just goes and explodes, right? And some people use like the Asian session as their quiet session, and then they wait for the European market to open up and they use that momentum, and they trade a breakout like that. Well, you need to ask yourself there, okay, go back, look at the data and say, how many days of the whatever it is, I don't know how many trading days is it, like it's 20 it must be
22 or something.
Yeah, 22 a month, so it's like 240 or whatever, 250 trading days, however many trading days you have, it's like 260 or whatever. How many of those days do you actually is the market quiet enough to give me a signal? Because it might be, out of those 260 days, maybe only 180 of them are going to give you a signal, right? So it really comes down to expectations about, knowing. You should know going into it that this system is going to do well during a trending market, or it's not going to do well. This system is going to do well during a range-bound market, or it's not going to do well. Like for example, let's say I was trading a stochastic-based system. Well, if my stochastic is giving me my signals, it's probably going to work really, really well when the market is range bound, when it's not really going higher or making higher highs or lower lows, when it's just kind of in a big giant box. It's probably going to work awesome. Now, as soon as the market starts trending, I'm probably going to get blasted. I'm probably absolutely going to get blasted. So I've got to know that, you can try and build a filter and all that, but beyond that, you've got to know that when the market's trending, my stochastic based system is just going to get obliterated. It's not going to work because it's going to keep showing overbought, and it's going to just be in an uptrend. You know what I mean? And I'm just going to keep getting stopped out or whatever. So when it comes down to it, there's really only a couple of different types of markets you're going to see. You're going to see a range bound market, or you're going to see a trending market. You're going to see a volatile trending market with deep retracements, or you're going to see a trending market with really shallow retracements where it's not that volatile and it just seems to almost go one way, right? And then you're going to see really, really quiet markets where it doesn't seem to go anywhere, right? And that's about it. I mean, that's really about it. Either the market's range bound and not really, it's going up and it's going down, or it's not really going anywhere, it's almost flatlining, or it's trending really hard with hard retracements and volatile retracements, or it's just trending really hard and just kind of flatlining and then trending hard and then flatlining and not even really even going, it's not even really making deep retracements. Like, those are the types of markets that you're going to see. So the question you have to ask yourself is, of those four types of markets, what kind of market does my system like? If I have a 1 pip scalping method, maybe I like that really quiet market where it's almost flatlining and not going anywhere, and it's like in a 7 pip range. Maybe that's what I'm looking for. If I'm a trend trader, maybe I want the quiet, low volatility retracement moves, and that's how I want to trade the trends. So these are the sorts of things that I would say that you need to be aware of. Does that help?
Oh yeah, totally. All right, thanks, Walter. That was awesome.
Thanks.